Hi friends, Professor Joe here. I hope you all are doing great and welcome to this video. In this video, we are going to discuss everything about candlesticks and a few candlestick patterns. And friends, if you're still not subscribed to my channel, kindly subscribe to my channel and ring the bell icon. I keep creating a lot of educational videos on trading, stocks, crypto options, and related topics. Now let us get back to the topic of the day. Now, if you go to any new country and you want to do a business over there, you need to learn the language of that country, the local language. Same is the case when you want to make money from the stock markets, you need to learn the language of the stock markets. And what is the language of the stock market? It's called as technical analysis. Yes. And in technical analysis, there are many small aspects like understanding the charts, understanding the trends, understanding support and resistance. And one of the most important thing is understanding the psychology of the market. Now, how do you understand the psychology of the market? You understand the psychology of the market by understanding candlestick patterns and chart patterns. Basically, chart pattern is a smaller version of a candlestick pattern. So say if you're looking at a daily chart and if you see a bullish engulfing candle and then you highlight that bullish engulfing candle and you go to a 5-minute chart, you will see a good chart pattern over there. Yes. So basically chart pattern in smaller time frame is basically a candlestick pattern in a bigger time frame. I have explained this in one of my previous video. I'm going to put the link for it in the description. Let us continue with candlestick patterns in this video. Now, candlestick pattern is very important in technical analysis because it tells you the psychology of the traders, that is the bulls and the bears for that particular time frame, which is very important. If you know the psychology of the traders, that is the bulls and the bears for that particular time frame, it helps you in taking the right decision, whether to go for a buy, whether to go for a sell. Is this support zone a real support zone, or is the price going to break through the support zone? Is this resistance zone a good resistance zone, or is the price going to break through the resistance zone? Looking at the candlesticks, you will be able to identify that. So in this video, we are going to look at different kind of candlestick patterns. Now, what is the beauty about candlestick pattern? That candlestick pattern can be used on any financial instrument that is showed on charts. Yes, so it can be stocks, it can be crypto, it can be forex, it can be options, it can be commodities, any kind of financial instrument that is shown on charts. You can use the information given in the candlestick pattern and trade the right way. So when the price goes down, it's called as a bearish price action. That means the bears are pushing the bulls down. Okay. So that is why it is called as bearish price action when the price is going down. Same way, when the price is going up, it is called as a bullish price action, that the price is going up. This means that the bulls are pushing the bears up and the bulls are more stronger. That's why it's called as bullish direction. And when the price is moving sideways, right? When the price is moving sideways, it is called as a sideways market or a non-directional market. Here, there is a tussle between the bulls and the bears, and we are not able to decide who is stronger at this stage, whether the bulls are stronger or whether the bears are stronger. So it's called as a sideways market. So there are three basic psychologies. One is a bullish psychology, one is a bearish psychology, and one is a sideways psychology. Now, the first most important thing that every trader should know is candlestick pattern are of different types. So the first type is single candlestick pattern, double candlestick pattern, triple candlestick pattern. Okay. So first we will look at some single candlestick pattern. Then we will look at some examples of double candlestick pattern. Then we will look at some examples of triple candlestick pattern. Okay. Now, when you look at a candle, the first thing that comes to your mind is whether the price was very bearish, whether the price was a little bearish, whether the price was neutral, or whether the price was bearish but not much. Or when you look at some bullish candlestick, you will come to know whether the price was bullish, a little bit somewhat bullish but neutral, or a weak bullish pattern. So you will come to know the different kinds of psychology that people have for that particular time frame by looking at that one particular candlestick. Okay. One very important thing about candlestick patterns is higher the time frame, stronger is that candlestick pattern. Smaller the time frame, weaker is the candlestick pattern. Okay. So if you're trading on a 3-minute chart, 5-minute chart, try to use more confluence other than only candlestick pattern, like a support and resistance, a trend line, or a moving average. Add those things to it. But if you're trading at a weekly chart or a monthly chart, and here if you see a good candlestick pattern, this is considered to be very, very strong. And traders globally, yes, traders globally are focusing on these candlestick patterns. So it makes a massive impact when a monthly chart or a weekly chart is showing a good candlestick pattern. It can be bearish, it can be bullish, but it makes a massive difference. But on a 5-minute chart, 3-minute chart, candlestick pattern plus, plus, plus. So you have to use multiple other confluence. If you're using candlestick, it's great, but you have to use multiple other confluence. Now let us look at a fully bearish candle. Now this is a Marubozu candle. Okay, this red one that you are seeing. Now, how is the price action over here? You can see that the price opened, and after that, the price did not go up. You can see that the price came down, went a little bit up, 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 and then closed down. So a bearish Marubozu clearly gives an indication that the price action during the whole day. Now, let me tell you that when I'm explaining this concept, I'm using candlestick for the whole day. Okay. So whenever I will say candlestick, it's for the whole day. Okay. The price action during the whole day was very, very bearish. The bears were in control of the market. They did not allow the bulls to push up much. Yeah, the bulls tried here and there in between to go a little bit up, but you can see that the bear was in total control of the market. This is the next type of candle. You can see that the body of the candle is red in color. There is a long tail. So what happened over here? What might have happened? The price action. The price opened, went up, came a little bit down, then again went up, came a little bit down and went up and made a new high. But the bears pushed the market down and it came down, went a little bit up, again came down, went a little bit up and again came down. So what happened? The price closed even below the opening price. So this is how the candle looks like a shooting star. And beside that, there are two other candles which are called as gravestone doji. This is also similar. Only difference between a gravestone doji and a shooting star is in a gravestone doji, the starting point and the ending point, that is the open price, close price, and the low. All three are almost the same. Whereas in the shooting star, the opening price and the closing price, there is a small difference. But both have long tails. That clearly says that the price action during the day was the bulls tried to push the price up, but the bears were more stronger and they successfully pushed the price down during the whole day. Okay, so the psychology is very, very bearish when you look at a shooting star. The third type of candle is like a neutral candle. You know, the price opened, it went a little bit up, came down, went a little bit up, created a high, then came down, went a little bit up, then again came down, went a little bit up, again came down and created a low. But then again, the bulls pushed the market up, the price went up, came down, went back up. Now, what happened in this entire process? The price where it started, where the opening of the price was, the closing also was almost at the same price or a little bit up or down. Now, in this case, what happened? The market is confused. The bulls are confused. The bears are confused. Should we push the market up or should we pull the market down? So there is a confusion in the market. So this is a neutral candle where the price is not going too much up or too much down at the closing. it is closing almost at the opening price. Yes, it can create a tail on both the sides. Okay, so that's why it's called as a neutral candle, and doji is one example of that, of a bearish or bullish neutral candle, where the price started at one price and closed at the same price. Only thing, the price during the day went a little bit up and down and created tails on both the sides. Now let us take an example of a bullish candle. This green candle is called a bullish Marubos. Now what happened in this case? The price opened at a low and then did not go below the low. It kept going up, came a little bit down, again went up, came a little bit down, again went up, came a little bit down, again went up. What happened in this entire process? The bulls were very, very dominating in this particular day. The price action was totally bullish. So when you look at such candlestick, you know that next day you can go for a buy, because previous day the bulls were fully in control. That means there is some information in the market about this particular financial instrument that is making the bulls push the market up. The next type of bullish candle would be a hammer. Okay, now in a hammer, what is happening? You can see that the body is green in color, the body is on top, and there is a long tail below the body. Now, what might have happened? The price action during the day, the price opened at a price, it came down, went a little bit up, it again came down, went a little bit up, it again came down. Then it created a low, and then the price started going up. The bulls started pushing the market up. The bears could not pull it back down. The bulls again pushed the market up. The bears tried to push the market a little bit down, but they were not successful. The bulls again pushed the market up, and it went and closed above the opening price. That means towards the end of the day, the bulls were very, very dominating. Okay. So this is how the candle is looking, where the body of the candle is on top. There is a long tail. And there is a dragonfly candlestick pattern. So you can see in a dragonfly candlestick pattern, the price opened, high, and close is the same. Only during the day, the price came down and went back up. So you will see a long tail at the bottom. So these are very, very bullish candles. The next type of candle you can see is again a neutral candle, but a little bit onto the bullish side. So you can see that it's a little bit green. So the price opened, went back up, came down, went back up, created a high. Then the price started coming back down, went back up a little bit, again came down, went back a little bit, again came down, and created a low. Now the bulls said this is a good price to enter. So they entered the market, the price went up, came back a little bit down, and again went back up. In the process, what has happened? The price action, the price wherever it had opened, closed also almost at the similar level. It's confusion, non-directional, neutral. Okay, so the market is not very, very sure. Whenever you see such kind of candles, if you are in a good profit, maybe you can exit. Okay, and if you're going in a loss, probably you can also exit, or you can wait, because the market is not sure at this time. So when the market is not sure and if the stop loss is not hit, then you still have an opportunity. The market might turn in your direction, because here the market is not sure. So another candlestick pattern like a spinning top. This is also similar candle, where the body is small and there is a tail on top and a tail on bottom. So this is a candlestick pattern which is not giving you any direction in the market. But if you're at good profits, you can book your profits, or you can bring your stop loss close to these candles, so that if the market decide to come down against you, then you can at least book some profits. Okay, it's an indecisive candlestick pattern. So when you're trading, how do you use these single candlestick patterns? So if you want to trade a hammer, then the hammer will be at the bottom of the chart. Now you can combine it with a support area. We will look how to enter. So we will discuss that at that. And a shooting star is a bearish candlestick pattern, which is normally found on the top of the chart. So when you see a shooting star on the top of the chart with a good resistance area, you can enter for a sell. The third type of candle, the single candlestick, is the Marubozu. So Marubozu, if you find it at the bottom, yes, it's a reversal pattern. But if you find it in the trend, it is also called as a continuous pattern. So candlestick pattern can help you in understanding whether the trend is going to reverse from here or continue from here. Okay, so this is another one important feature of candlestick, which help every single trader to understand whether this support is going to break or whether this support is going to hold because of the candlestick pattern. So it's very, very important to understand the price action that is happening within the candles so that you have an idea what is the psychology of the market looking at the price action. The third type of single candles are the neutral candles. So neutral candles, as I said, when you see such candles, you have to be cautious because if you're in a profit, maybe you can book those profits or bring your stop loss up, or this can be a signal of market reversal. So you only have to be cautious. It can be only a signal. Okay, it is not assuring you anything because the market was not very sure. The price went up, price came down, opening and closing is almost the same. So these are neutral candles. So all these candles which we discussed till now are single candlestick patterns. Now let us have a look at double candlestick pattern. So double candlestick, what is double candlestick? Two candles. So when you bring two candles together, you're using a double candlestick pattern. So the first kind of double candlestick pattern is a bullish engulfing pattern. Here what is happening is a red candle is engulfed by a larger green candle. So let us decode the price action in these two candles. So like you can see in the first candle, the opening price, the price went a little bit up because there is a small tail. Then the price came down, went a little bit up, price came down, created a low for that day and went a little bit up. And at the same time, both the sides, there is a small tail. The next day, the green candle started, but with a gap. So you can see that the closing is red. So it is somewhere over here. And the opening of the green is even lower, somewhere here. So it is very clear that the opening is below yesterday's close. Okay, so the price opened, went a little bit down because it has created a tail. Then it went back up, came down, went back up, came down, went back up, created a high, and then again came low and did a closing. So now if you put the open, close, high, low of both the candles together, you will see that this kind of candle is created. So there is an open, there is a close which is above the open. There's a long tail because the price during the 2 days was down and then came up. So if you combine a bullish engulfing candle, you can clearly see that it is looking like a hammer. So if you see something like this at the bottom of the chart, it's a clear bullish reversal. Okay, so you can enter into a trade if there is a good support over there. Same is a bearish engulfing pattern. So let us decode the price action in the bearish engulfing pattern. So this is a green candle and you can see a small tail. So it opened, it went back down a little bit, then the price went up. It created a high and then came back a little bit down. So you can see that there are tails on both the side and the opening is below and the close is up. So it's a green candle. Next day, the price opened a little bit more higher than the close of the previous day. Then went a little bit up, created a high, then came down, went a little bit up, came down, went a little bit up, came down again, created a low, and then went a little bit up. So you can see the tail over there and created a close. So if you combine both these candles and the price action that happened between these two candles, you know that this is the opening point, this is the high, this is the low, and this is the closing point. So if you try to make a candle out of this, the candle will look something like this, a shooting star. So if you find a bearish engulfing candle on top of the chart, it is basically representing a shooting star also. So a bearish engulfing pattern is a very good indicator that the price can come down from here. Get it? How the price action impacts the design of the candlestick. So these are some examples of dual candlestick patterns. To the left is the bullish candles and to the right is the bearish candle. So whenever you see a bullish engulfing or a bullish harami or a bullish tweezer candle at the bottom of the chart, you can go for a buy. And when you see a bearish engulfing, bearish harami, or a bearish tweezer candle on top of the charts, you can go for a sell. So these are reversal candles and it is showing you the direction also. The third type of candlestick pattern is three candles put together. So let us take an example of a morning star. So now why a morning star is a bullish candlestick pattern? So you can see that the first candle is red in color. So it opened here, the price went a little bit up because it has created a high. Then the price came down and then went a little bit up. So it created a low for that day and then the price went up. So you can see the candle is red in color with tail on both the sides. The next day, the price opened a little bit low than the previous day's close. But then the price went down, okay, then went back up, created a high for that day, and again came down and closed. So you can see it's green in color. That means the open was low and the close was high. And there is tail on both the sides of the candle. The third day, the price opened even more ahead. Okay, so the price opened even a little bit up, came down because there is a tail, then went back up, created a high, and then came back down. So you can see that's a green candle with tail on both the sides. Now, if you put all these three candles together with its open, high, low, and close, it will look something like this, like a hammer. So if you see a morning star at the bottom of the chart, it is representing basically a hammer at the bottom of the chart, which is a good candlestick pattern to enter the trade. So you see how the price action is working. The second type of candlestick pattern with three candles is the evening star, which is found on the top of the chart. So the same price action, you see the opening is a green candle. The price came down because there is a tail. Then the price went up, created a high for that day, and then came back a little bit down. So you can see the candle is green in color with tail on both the sides. Next day morning, the price opened a little bit high. It went up again, created a high, and then came back down. And then you can see the price went a little bit up, but closed below the opening. So it's a red candle with tail on both the sides. The third day, the price opened even below. So you can see it's red in color. The price opened, went a little bit up because there is a tail, then came down, created a low, and then went back up and closed for the day. And the opening was above and the closing was low. So it's a red candle with tail on both the sides. Now, if you put all the three candles together with its opening, low point, high point, and close point, you will see that the candle is looking like a shooting star. So it's a clear indication that the price action is bearish. So when you look at an evening star, it represents basically a shooting star, which is the bearish candlestick pattern. And if it is found on the top of the chart, it's a clear indication that the price can come down from there. These are some examples of triple candlestick patterns. Bullish is morning star and three white soldiers, and bearish is evening star and three black crows. These are some examples of triple candlestick patterns. So when you see these candlestick patterns, either at the bottom or at the top, you know that these are reversal candlestick patterns and you can enter the trade according to that. Now, the best part about candlesticks is it can be used for entry and exit also. So when I'm saying something for a bullish entry, it is an entry point. And when I'm showing something for a bearish entry, that is the exit for the bullish entry point. You get it? So if you are entering for a bullish trade with a bullish entry signal, you exit when you see a bearish entry signal. Simple as that. So candlestick patterns are very, very useful for entering a trade and exiting a trade also. Like in this example, you can see that the price is coming down. It went back a little bit up, came back down, and it entered into a previous support zone. Now in this support zone, if you get any of these candles, like a bullish engulfing candle, a morning star, a bullish pin bar, or basically a hammer, or a bullish harami, you can enter with a buy trade over here. So now you understand how to enter. Now, how do you exit this trade? Exactly opposite to this. So like you can see over here, the price went up, came down and went back up into a resistance zone. Now, when the price went back into a resistance zone and you see these kind of candlestick patterns like a bearish engulfing pattern, an evening star, a bearish pin bar or a shooting star or a bearish harami, you enter for a bearish trade, and if you are already in a bullish trade, you exit that trade. It is so simple. So you just have to combine those for entering and exiting. So you can see candlestick patterns are very, very important for entering a trade and exiting a trade in precision. Now 100 times if you trade, now if you trade 100 times, okay, probably 60, 70, maybe even 80 times you might get a profit, but not 100 out of 100, because there is no 100% trading strategy. Okay, so you have to be careful with your risk management and everything. Okay, but these are trading strategies where you're using a support zone or a resistance zone with candlestick patterns will give you very, very good win ratio. Okay, this will give you very, very good win ratio. Now, continuation pattern. The price is coming down, it goes back up, it has created a support zone. Then the price breaks the support zone and the price goes back up into that support zone, which has now become into a resistance zone. Now, in this area, if you're looking at these kind of candlestick pattern, like a bearish engulfing pattern, a bearish Marubozu, or a bearish falling three methods, that is, this is a clear entry point at this kind of continuation pattern. Okay, so you enter over here and your exit remains the same. When the price goes down, it reaches a support zone. And if you see a bullish candlestick pattern over there, you exit. Simple. And bullish entry is the same. The price goes up, creates a resistance zone. The price comes down and then breaks the resistance zone and comes back again into the resistance zone, which has now become a support zone. Now, in this area, if you are looking for bullish candlestick pattern, which are continuation patterns, then you can enter the trade from here. Simple. So if you see a bullish engulfing pattern or a rising three method or a bullish Marubozu, you can enter a trade with precision. And how do you exit? When the price reaches a resistance zone and it shows a bearish candlestick pattern, you exit. Simple. So now I hope you have understood what is the price action that is happening within the candlestick patterns and why candlestick patterns is useful for entering a trade, exiting a trade, and different kind of candlestick patterns, how it is connected with different style of candlesticks. Like a two candlestick becomes one candlestick or a three candlestick becoming one candlestick. So let us have a cheat sheet. Now there are a lot of names. Okay, what is more important is that you understand the price action that is happening within the candlesticks. So whatever I have explained in the price action that is happening within the candlestick is more important for you rather than remembering the names. But yes, if you remember the names, it is great. Okay, so I've created a cheat sheet so that you can just go through the cheat sheet. So a spinning top, which looks something like this, is a neutral candle. A doji candle, which looks something like this, is also a neutral candle. A white Marubozu or a green Marubozu, which looks something like this, is a bullish candle. A black Marubozu, which looks something like this with no tail on top and bottom and the body is fully black or say red in color, is a bearish candlestick pattern. A hammer, which is found at the bottom of the chart, is a bullish candlestick pattern. A hanging man, which looks just like a hammer, but it is found on the top of the chart, is a bearish candlestick pattern. Remember, both look like hammer, but one is found at the bottom, so it becomes a bullish candlestick pattern. And the second one is found at the top of the chart, it becomes a bearish candlestick pattern. Inverted hammer at the bottom of the chart is a bullish candlestick pattern. At the same time, a shooting star, which just looks like an inverted hammer but is found on the top of the chart, is a bearish candlestick pattern. Then there is bullish engulfing candle. It can be found at the bottom or a continuation candlestick pattern. It is a bullish candlestick pattern. That means a bullish engulfing candlestick pattern where the first candle is a small red or a black candle and the second one is a white or a green candle, which is bigger than the red candle or the black candle. Okay, so bullish engulfing candlestick pattern. The next one is the bearish engulfing candle, which if found on the top of the chart is a reversal pattern. And if it is found in the trend, it's a continuation pattern, but it is a bearish candlestick pattern. A tweezer top found on the top of the chart, okay, is a bearish candlestick pattern. And a tweezer bottom, if found at the bottom of the chart, is a bullish candlestick pattern. Then there is morning star, which we explained, is a bullish candlestick pattern if found at the bottom of the chart. And evening star, which we explained, is a bearish candlestick pattern which will be found at the top of the chart. Then we have the three white soldiers. Okay, if it is found at the bottom or even trend continuation, it is a bullish candlestick pattern. It can be green in color also. And three black crows. It is a bearish candlestick pattern. It is also a reversal plus a continuation pattern. If it is found in the trend, it is a continuation pattern. If it is found on the top of the chart, it is a reversal pattern. Then three inside up. That means the first candle is red, the other two candles is green, but the third candle's ending is above the top of the red candle. Okay, so it's very, very clear that it's a bullish candlestick pattern. And three inside down is a bearish candlestick pattern, where first is a green candle or a white candle, and then there are two red candles or black candles, and the second black candle goes below the low of that green candle. I hope that all these explanation has made it very, very clear that how you can use candlestick patterns and the psychology of the price action within the candlestick patterns to trade in a much better way. What is more important than remembering the name of the candlestick pattern is the price action. What actually happened in that one candle or two candle or three candle. If you're able to understand that, then the name of the candle doesn't make difference. Also, what is more important is never trade candlestick pattern in isolation, especially on a lower time frame. If you're looking at a higher time frame like a weekly or a monthly chart, yes, it holds a lot of value. But at a lower time frame like 30-minute chart, 1 hour chart, 4 hour chart, use it along with good support zones, resistance zones, trend lines, moving averages, dynamic moving averages. This will be very, very helpful for you to get good profitable trades. Another very, very important thing about candlesticks is when we explain candlestick, we are seeing perfect candlesticks. But when we are looking at the real chart, the candlestick might not look. There might be a small tail on top. There might be a small tail on bottom. The textbook candles does not match with the candles at the chart. So that's why I explained the price action within the candlestick. So if you understand the price action within the candlestick, then this little bit change here and there will not affect your trading strategy. Okay. But you should always remember this, that the candlestick that you see in the books might not be exactly the same that you see on the real charts. Well, with that, I come to the end of this video. But remember, if you really want to become a successful trader, you have to really spend time in the markets. You need to practice a lot. You need to have patience and persistence in the market. Okay, so do not risk too much of your funds in one trade just because everything is looking great. Invest only 0.5% of your equity so that you stay longer in the market, you gain experience, and you're ready to make money from the markets. And finally, friends, if you love the way I'm creating content, please like and share these videos. So like you, there might be many others who want to learn trading the right way. These videos will surely help them, at least to improve their standard of trading. I have also written a book on trading. Traders, you can win, but first learn to lose. In this, yes, I have explained about candlestick patterns, and my personal experience is also mentioned in this book. It's not a very big book, but I have shared a lot of my personal experience in this book. It's available in Amazon, in Kindle. If you're interested, please go ahead and buy it. And friends, I have created a lot of videos, and I'll be creating many more videos in the future. If you're still not subscribed to my channel, kindly subscribe to my channel and ring the bell icon so that when I create a video next time and upload it on YouTube, you will be the first person to be notified. Friends, I have also created a series of videos on trading training. The link is given below. Kindly go through those videos. It will surely help you to improve your trading. And finally, friends, all I can say is keep learning, keep growing. Thank you. Namaskar.